Hi guys, welcome again. And lately, Venkat and I have been thinking about giving a kind of a taste of different things. You know, we've been talking a lot about real estate. We just talked about something within real estate world, but a little different thing, commercial real estate. You know, rather than residential real estate. So we always try to come up with new stuff within the same topic. And today is going to be not completely different, but again, it's about the same. It has something to do with savings because our channel is all about savings, investing, and all that together. So we're going to talk about actually Venkat is going to walk us through again about how to save money on your business. Because if you're a business owner, be it real estate, LLC, or whatever, you know, it could be a restaurant or whatever, if you're a business owner, you're actually paying a lot of taxes. You're losing money on that, right? But Venkat is going to show us how to save instead of paying, or even you still pay, but how to kind of overcome or net it off and make a profit from your business by using Section 179. So probably you might not even have heard about this one, but today you're going to, Venkat.
That's right, guys. Yeah, like you said, most of us, even including myself, right? I
Right.
was paying more taxes. I didn't even know that. IRS goes after people who not paying taxes,
Hmm.
but they don't mostly go after. They don't worry about if they get more money, they
Right.
sometimes they refund it. I do see it, it's automatic process, but they are not going to test it out, right? They're not going to do too much analytics on their part of it, and to
And
try to
just
pay it back.
not going to say that not to pay taxes or no, nothing like that. It's about
Right,
using
right.
the system. And also, we are not financial advisors by any means.
That's
It's
true.
through reading and understanding. This is the information that we gathered. It's about using the legal technique, and it's out there for you to use. Section 179 is about that. So that's this.
Exactly. Yeah, exactly. I'm going to show you the scenario, guys. Like, if you don't use that section, like, it's basically like, there is a opportunity out there. They're giving it to you, but you're not using it. That means you're losing money, right? Basically, that's how we are trying to say it here. Anyway, so I'm going to share my screen. So because I note down some numbers, that way it's easier to see it than hear it, right? So let me share my screen. I think you can see it, right, Randy?
Right. I can see it. Yeah.
Oh, okay, so this is section 179, guys. So just remember that one. Also, I'm just going to go through very over, like in a basic overview of it, right? Because I didn't even know this one existed. I came to know like a few years ago, because I was going through a lot of research. So hopefully you are hearing this first time, so you could take advantage of in the future, whatever whenever time comes, right? So you could save thousands of dollars just using this section, guys, in your tax return. Otherwise, you would be paying more. Let's say the scenario one, right? So you're buying a SUV. That's your business. Maybe you're using it more than 50% for your business, right? You're
Right.
also using the same one for personal. It doesn't matter. If you're As long as you're using more than 50%, I think there is a limit, the number of times you're using the vehicle and all those things. All those nuances I'm not going to go through because that varies a lot every year. The rules changes, so you have to check with your CPA or yourself what is the current rule for that year whenever you're watching this video, guys. So right now, let's say you're buying this for your personal use as well as business or business use. It doesn't really matter. $50,000 is the price of that vehicle, and it's more than 6,000 pounds. Let's say it's the Volvo XC90, right? That's, I think, more than 6,000 pounds, guys. So it has to be more than 6,000 pounds, a bigger vehicle, and it's an asset. Like, you're buying this as an asset to your business, right? Anything other than real estate, um, anything other than real estate, land, the property or the land, you can claim this. Any kind of assets that you're buying, right? Not only for the car. So in this example, I'm giving you the example car, right? The SUV. And let's say you didn't take this section 179, and then you don't know about it. So you're only claiming mileage and stuff like that. That's it, right? Maybe interest you're paying on it, and that's it. Not really like you can actually climb the first year. As soon as you buy that first year, you can climb this section 179. If you miss the first year, you cannot climb the section 179. You have to climb bonus depreciation, something called bonus depreciation. Section 179 has I think up to $1 million climb you can do. Like let's say you're buying $1 million worth of vehicles, or buses and maybe something like trucks, everything. You can climb everything 1 million up to $1 million. That's kind of a maximum, I think, but it varies. Again, the number varies. So check the current number with the IRS, right? So you can climb 100% of it. 100% of it. Let's say you made $50,000, not 50,000. Let's say you made $100,000 that year, right, in your business.
Mhm.
$100,000 your revenue, right?
Yeah.
So take that and you remove 50,000 right away from
Mhm.
that, right? Even though this 50,000 is under loan, like you got it loan, you didn't even pay it. Let's say you didn't even pay anything to it, right? It's a zero. It's like a no down payment. So here, so you climb 100% of it, and then the tax rate for your business is 30%. Let's say it's 30%, right? So that's basically out of this is 15. 30% of this 50,000 is $15,000, guys. So you end up the vehicle would cost only $35,000 for you, because you got this back in your tax return.
So, yeah, so let me get this refresh right here. Let's say your business is earning 100 grand, right? That's what you said, right?
Hmm.
You bought a vehicle which presumably used half the time, like 50% of the mileage is for business. So you can claim up to 100% of that total price, whether you bought you borrowed to borrowed money or not, irrespective of that. You can claim up to 100%. So that means you can claim the entire outright market, sorry, the purchase price of the car. That's 50,000, right? And then when you're claiming, when you're filing taxes, instead of, are you saying that instead of being taxed at 100,000, you're being
Right. So let's say it's 100,000 is your total, right? So
right
minus so the taxable income will reduce to
to
50,000,
50,000? That's right. Yep.
right? And then um like if you are in a 13 30% bracket, right? So
Bracket. Right. Right.
15,000 would be less on, like out of this there will be even 15,000 less. If you have to pay, let's say, I don't know how much you have to pay on that, let's say 30%, right? So that's going to be almost you wouldn't pay any tax, but we are not tax advisors, right? So basically what we are trying to emphasize in this video is there is section 179 that can be used to climb. Let's say you cannot climb everything. Let's say you can only climb 30,000 a year, right?
Mm-hmm.
So rest of the 20,000, you can use something called bonus depreciation.
Okay.
So there are, like, you just have to remember these two things, guys. So most likely you will be going to the CPA. Sometime you have to remind them, write this down in a post-it.
Yeah.
Section 179, bonus depreciation. Bonus depreciation applies to, like, let's say you cleaned out all your windows in your rental property, right? You replaced all your windows. That is coming under bonus depreciation too, right? You can climb that too. Like you basically removed all the windows and put new windows to it, right? That's also bonus depreciation. So you have to ask your CPA or whatever, like you probably did something to your house. You don't, nobody knows like whether that is qualified under bonus depreciation or
Yeah.
not, right? So but basically you have to use the section 179 first, and
Mm-hmm.
anything remaining you use this bonus depreciation.
So this is what I'm going to get out of this video, Venkat. If you, because I'm not a number person by any means, so if you're watching and if you're kind of dabbling around these numbers, do this just like what Venkat said. More than likely, you're going to take your taxes to a CPA, right? Let them know. Let them know what you know. That means tell them I've been using this vehicle for my business, and can you use Section 179 and use bonus depreciation. That's all you got to say. And CPA will ask you some questions, and that'll be it, right? And if you, I mean, that's the minimum, right? That's the bare minimum that you can do.
Yeah.
And you don't have to get your head wrapped around these numbers, this and that, but the CPA should know if you have a good CPA. And if you don't remember, if you don't take anything out of this video, at least remember section 179 and bonus depreciation and use those terms when you talk to CPA. That's what I would do.
Right. Yeah, that's exactly right, guys. Yeah, just try those things, and most of the time the CPA don't even mention it. Like they don't know whether you bought a car or not, right?
Right. Yeah.
So just those are the things that you need to bring it up. These are just two things, guys. There are many ways to you can save tax. We will go through those in the future videos. Just come back and visit our channel, because those videos will give you more pointers for you to take it to the CPA this year.
Yeah, absolutely.
Yeah, that's all, guys.
Thank
Thank you
you.
so much.